Okay, everyone, welcome to this presentation on the Delta Surge from Orderflows.com. My name is Michael Valtos. I'm the founder and trader at Orderflows.com. The Delta Surge is a free indicator from Orderflows.com, and at the end of this presentation, I'll show you how you can download it from my website for free. Again, I'm offering out there for free. Okay, some people will try to take the same concepts, package it up, call it the Delta algorithm, beat the institutions at their game, and make lots of money and charge you $1,000 for it. But you know what? If you just stick around and wait to the end of the presentation, I'll give you the information that you can just go and download it from my website for free. It runs on NinjaTrader 7. NinjaTrader 8 version is not yet ready. NinjaTrader 8 is still in beta. Just a brief example. This is a sell here. Okay, this one didn't work out. But here you gotta write off this sort of swing low-ish area. You got a nice buy and it's a nice move. 65, it's almost a 10-point move. Anyway, before I get started and talk about anything, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So the tools that I'm going to use in this presentation are the Orderflows Trader, which is a volume footprint chart that I developed, but it's more than just a volume footprint chart. There's a lot of analysis that's going on in there, and it's easy to understand analysis. It's not stuff that you really got to sit there and scratch your head and try and figure out. The Delta Surge indicator, which is what this presentation is about, and the NinjaTrader trading platform. Again, you can download this for free. Go to www.ninjatrader.com. It's a great tool for trading and backtesting and charting. I said, and it's free. They have a paid version, which is great. If you also want to trade, you can open an account with them, and since you have a paid version of their software, you can get extremely competitive low commission rates for futures contracts. Okay, so again, the Delta Surge is its free indicator, and if you stick around to the end of the presentation, I'll show you how you can download it from my website for free. What does it do? It measures increases in delta, either positive increases, which show traders basically piling into the market, or negative increases, which often indicates traders getting out of the market. Oftentimes, once the market is dropping, people can't get out fast enough, and you just see it, building and building and building. The Delta Surge will run on the Orderflows Trader chart as well as a normal bar chart. I know some people are scared of trading a footprint chart, and that's one of the reasons why we developed it to also work on a normal bar chart. So how does it look? It looks like this. Here you have this high of the day right here, 74. You got a sell signal here, and then you can get short somewhere anywhere between 68, 69. And it makes a nice 5-point move shortly thereafter. How does it look on a bar chart? This is how it looks. You've got a nice high here. Gives a sell indication. I'll be honest, all the charts don't look as pretty as this. I'm just showing you. There's charts I'll show you where it doesn't work. But anyway, let's get on to what is delta as applied to order flow. Well, it's the difference between aggressive buyers and aggressive sellers. Sometimes when you hear the term delta, you think of options. Okay, order flow delta is completely different than options delta. What's an aggressive buyer? Well, it's a trader who buys the offer. What's an aggressive seller? It's a trader who sells at the bid. Market orders are considered aggressive. For a market to move, there has to be a trade, right? And there has to be, every trade has a buyer and seller. Again, the market's not going to move because there are more buyers than sellers. No, that's crazy. Yeah, for every buyer there is a seller. The reason the markets move up is because buyers are being aggressive and they are buying the offer. That's what's causing the market to move up, because they buy enough of the offer that the price moves higher. Everything that was on offer has been bought, and now you're looking at the next price. So say the market is 9 bid at 10 and there's 20 lots offered at 10. Someone comes in and buys 21. They bought all the 20 that were there. Now the market is bid at 10, it's 10 bid at 11. That's how the markets move higher, is when people start buying the offers. And markets move lower because sellers are selling the bid. Okay, some people will, I'm sure somebody will comment and say, oh, that's not true. Well, yeah, there are other ways. People could pull their offers. It could be no offer. Yeah, that could cause the market to go higher because nobody wants to sell. Okay, but in normal market conditions, there's generally always a bid and an offer. You don't have to get all extreme and send me nasty emails and saying it's wrong. I mean, come on, trade it under normal conditions. There's a bid and there's an offer. I understand that there's going to be times where, people like to play games and pull their offer or pull their bid. That happens. Okay, but generally there's always now that it's all on screen, there's a bid, there's an offer, there's people's jobs. They have to, market makers, they have to always provide a bid and the offer that people can trade against. So delta is the difference between aggressive buyers and aggressive sellers. So, there are many ways traders can try and hide their intentions, their aggressiveness in the market, but ultimately their actions will show up in the volume and more precisely in the delta. People can try and pick away at an offer, say there's 200 on the offer and someone's got 500 to buy, they might buy 100. They don't want to turn it bid. They may buy 50. Wait for more offers to come in and keep buying it like that. It will show up in there. Now, while market orders are aggressive, limit orders are generally considered passive, since traders are waiting for the market to come to them. However, there are instances when limit orders can be viewed as aggressive action, but that won't show up in the delta as aggressive action. It'll show up as normal volume traded on the bid. It actually show up opposite. But an aggressive, I guess the point I'm trying to make is, there are instances, and the main instance is an iceberg order, not a normal iceberg order, but say someone's got 5,000 S&Ps to buy, and they're going to iceberg it and show 100 at a time. Yeah, they're being aggressive because they don't want to, they got a lot to buy, but they're not showing it all. Now, that's not to say, they can start moving it up, but they're holding the market there. That's borderline. If anything, I consider that passive aggressive. They're not showing their intention. They're showing it for people that are watching the order flow. You can see it. You can see that there's a big iceberg there supporting the market. But it's not an aggressive action in the term of lifting the offer. They're there supporting the market, usually on the way up. People don't really necessarily work icebergs on the way down trying to support the market. If someone wants to support a following market, they'll just show everything. Okay, just briefly, real quick, background on me. For those that, that are new to watching my videos, those that don't know me, I've spent, basically 20 years on the institutional futures trading side. 8 years at JP Morgan, 4 years with Cargill, 3 years with Commerce Bank, 2 years with EDF Man on the commodities trading side. And, so I've been around big orders my entire life. I'm not someone that's just conceptualizing things, in the basement on a weekend. Okay, these are based on my experiences of trading with, with real money, and big money. So I know what it's like to be aggressive at times in the market. I know it's time to try and support the market. I know what it's like to try and hold the market up so you can get it to close at a certain price, or push the market down because you need it to close below a certain price. Those things happen in the markets, okay? And sometimes all it takes is a little bit of a push. What the delta surge does, it's a way of reading the aggressiveness in the market, okay? And yes, I have traded with this, okay? I spent a lot of time trading commodities in my career, among other things. And, people always ask, what does order flow work better on? Does it work better on commodities? Does it work better on financials? Honestly, it works good, if not great, on any auction market, in the sense that, whether it's bean oil, whether it's soy meal, whether it's corn, or whether it's DAX, whether it's Euro stocks, whether it's E-mini S&Ps, NASDAQ, you'll see a lot of charts, and you'll see the same thing. I'm looking at the same thing because the same concepts hold true. It's not something that's curve fitted, where it's the crude oil trader, where it only works on crude oil. That's very, very limited. Trading is not a red light, green light system. I mean, some people like to come to the markets thinking, well, if I could just have a system that will tell me when it's green buy, when it's red sell. Well, that's not trading. Trading is being able to make decisions, understanding what you're seeing happening in the market and trade off of it. Okay, so sorry, I digress. Back to the topic. Where can you see the delta? Well, right now you need an order flow chart. You don't necessarily need mine. If you have an order flow chart from another provider, or you can even get them for, I'll say for free, but you can get it for $100. You get the Gomi ladder, or I think it's called. If you go to futures.io.com, you can become a member there for $100, and they got a lot of nice indicators there. You can download it there. So it's not free, but you got to pay $100, but it's worth it, especially if you're new to trading. You can learn a lot. There's a lot of interesting people on that website. I don't go there anymore, but it's an interesting place. There's haters and there's nice people there. And okay, it doesn't appear yet on a normal bar chart. When I say it doesn't appear yet, so I'm sure somewhere down the line, someone said, hey, we should add this feature so people can see it on a normal bar chart. And it's usually displayed at the bottom of a chart. Like here, this is a footprint chart. You can see it here. Boom, 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 delta. There's max delta. The main delta, the number is this delta number is the difference between the buying and the selling. Max delta is the most positive delta it was at one point. The min delta is the most negative it was. Cumulative delta is the running delta for the day. It could either be positive or negative. So what does the delta surge do? Well, it measures the expansion in delta. And why is the expansion important? Well, it's because it's a sign that one side, either buyers or sellers, are showing their aggressiveness to the market. Again, think of it as people piling into the market. Okay, here's an example. Going back to this is an E-mini chart from June 30th. We're rallying up. Boom, 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 boom. Hit the high. You got a divergence up here. You got the negative delta. And what do you see? You see 263 minus 263 minus 474 minus 1513. That's your surge. And what happens is you get a nice 5-point move off of it. What you're seeing, especially when it's up near a high. As I say, always try to, when you're trading. I say this a lot to people. I say it a lot because I want it to sink into people. You have to take what you're seeing in context of the market. If you want to sell, ideally you should be looking for a move to be ending and then sell, rather than, like here's is that soybean chart, right? You got to move up, then you get a sell signal. Yeah, that's nice. That's what you want to see. Yeah, this one is nice here. It sort of came down, bounced up a little bit, continues lower. What you don't really want to see is you have this big move down here, then you're getting a signal down here. That's not going to be as effective as, or I'll say as effective, but not as rewarding as taking a signal structurally higher on the chart. Okay, so again, the delta surge is not designed to be a red light, green light trading system. When trading, you have to take into account market context. Is the market trending or consolidating? Are you getting a buy signal at a high? What's the order flow doing? I mean, I'm not going to say you can't buy at a high, because the market can go higher. But that's why if you're trading with an order flow chart, it'll give you that extra benefit of analyzing the volume and seeing, are people, how aggressive are people really being? And conversely, when you're getting a sell signal, are you retesting lows? Are you going into lows for the first time? Does it look like it's capitulation where everyone in the market is just falling out of bed and everyone's just saying, get out, trading places, hey, turn those machines back on, get me out. Is that what's happening when you're pounding into a low or not? That's why I say, take things into context. I mean, that's part of being a trader, is you have to understand what the market is doing and make a decision. So, I'm going to show you some examples real quick, and, different types of charts, different time frames, different markets, so you can see it in, and make the decision for yourself if it's something you could add to your trading or not. I'm not saying you have to use this, but I think if you use it, it will give you an insight into the market that not a lot of people are using. I mean, honestly, very few people analyze delta, and make trading decisions off delta. Again, can you use it as a standalone? I did. I did use it as a standalone, and but back then my trading was a bit different than it is now, in the sense, and the markets that I was trading it in, weren't as, it was in the agricultural markets is where I developed it. And, agricultural markets is a market that's dominated generally by commercial traders, and smaller extent, it's not dominated by retail, it's dominated by commercials, but, there's a portion that's retail driven. Nowadays, there's some, there's hedge fund money in it, but, years ago when I was trading with this, there wasn't all that hedge fund money in it. Now sometimes, even more so with the hedge fund money in it, when hedge funds say, risk off, they just get out of everything all at once. You get, 5 different hedge funds selling their position out, and, so you can get some nice moves. And trust me, that does show up quite nicely. I mean, you don't know it when you see the, when you see the delta, you don't know that it's a hedge fund or a commercial or Joe Blow down the street. But, what's important is you don't care. What you're looking at is you're looking at the numbers, the delta numbers. Again, this is the chart I showed you earlier, E-mini 10 range chart. This is your high here. This was your high earlier, right? And you got the delta surge just off the high. Here it looked like it was starting to turn. You got the big negative delta. Then what happens? It changes in here, right? It's met with positive delta, bigger positive delta, even more bigger positive delta, and you're taking out the high. Okay, and what's happening at the high? You got, you're seeing some buying imbalances in there. That's why I say, if you have an order flow chart, it's going to put you not above, but it's going to put you on you can see the market, what's happening in the market, and understand. If you're just looking at a bar chart, you don't know what's going on. You say, oh yeah, we're breaking out the new highs. But if for a high to continue, you're going to want to see aggressive buying, and you can see it coming in here. You're getting aggressive, stacked imbalances. I don't have the stacked imbalances turned on, but, what you're seeing is the market turning around and shooting higher with very aggressive buying. On an old bar chart, you're not going to see that. This is, I think, a chart I showed you earlier as well. The 10 range again, you have your high, delta increase, 263, 47, 424, 1500, and you just see it, delta even still staying strong all the way down here. So people will say, well, where do you get out? Well, you're looking at some signs. Yeah, you got a positive delta in here. Just because you got one bar with positive delta doesn't necessarily mean you got to get out. But, watch what's happening and, make the decision from there. Okay, this is what is this? This is a 15-minute E-mini chart. And you have the delta here, it's negative, then 1100, 1900, 4000, and boom. This is a 15-minute chart. I'm not saying you got to buy as soon as the bar opens. If you want, you can work, you could work something in there, try and finesse an entry, but, what it do? Went from 08 up to 18. I'm not saying you're going to sell up here, but this is a meaty portion here. You could have got, 4 or 5 points out of it, which is nice. I mean, it is a 10-point move, so you could at least should be able to get half of that. I would hope if you're a good trader. Okay, here is, again, it's a 15-minute chart. Now here's a sell signal, okay? So we're coming off this high, start turning around, come up here, okay? Going sideways, then you get the signal here. Now, honestly, I would still probably take it because, this is a decent move from 06 up to 15, almost 16. It's a 10-point move and you start to come off, okay? But what happens is it turns later, and right before you get up to this area, you see all this buying, it's aggressive buying here. So, even if I was short somewhere in here, my stop is just going to be up here. So, maybe I'm getting short at 11, my stop, 15, if that. This is a 15-minute chart. So, I'm going to have bigger stops than normal, but, my profit targets are going to be big, and my stops might be a little bit wide. But you know what? If I see this buying like this with the stacked imbalances coming in here, I'll be, you gotta respect that, and, you have to have a stop in no matter what. So, this one, it started, it looked like it was working. If you're getting short somewhere around 11, it's trading down to 08, you're thinking, hey, this is great. You see this bar, then what happens? It just turns around right here, and then you run into this bar, and it's just, you're screwed. You're gonna get stopped out. I mean, there's no way about it. I'm showing you winning trades. I'm showing you losing trades. Okay, this is again, a 15-minute chart. And you have your high here, start coming off, boom, negative delta 323, 709, 1000. Okay, you get the signal. Again, you could get short somewhere in here, 69, down to this 60s, 64, 65 area. Is this okay? This is you can get an E-mini 15-minute chart, because people asking what type of charts can I use. I'm a swing trader. People come to me say I'm a swing trader. I have a long-term. Don't say long-term. I got more than a day time frame view of the market. Can I use your order flow indicators on my charts? Yes, you can. I'm just running through some different examples for you so you can understand and see and make the decision. Again, this indicator is free. I'm not charging you for it. So if you like it, add it to your trading. Give me credit for it. And if not, then okay, great. But so here's your high. Okay, you get the signal here again. It's 847, 3000, 7000, and just sort of bounced around. Boom, went up. Probably would have. I don't know if it would have stopped you out if you're getting short somewhere around 21. Let's move up to 23 3/4. It's only a 3-point stop at this, not even 3 points. It may not have, and then you're coming into the close, comes back down. I don't know. You scratched it. I don't think I would have gotten stopped out on this. Usually on a 15-minute chart, I'd have at least a 3 to 4 point stop rather than 2 or 3 ticks or 2 or 3 points. But anyway, again, you could see how it looks, and you could store it on your charts, watch it in real time for a while, and see if it's useful to you. Okay, this is that bean chart. Okay, and I showed you a nice chart. Not many people trade beans, but I want to show you on different markets. A lot of people trade crude. Okay, so this is an 8-range chart. Here you got a buy signal. This one failed. Okay, this one, the buy signal, this one worked. And people will, I've given people indicators, and they'll send in a chart like this. And they'll say, oh, the indicator sucks. Look at this, it lost. Well, not every indicator, every time it kicks off, is going to give you a win, a big win. There's going to be times, unfortunately, I'll say, that there's 2 things sure in life: death and taxes. The third one should be you will have trading losses. Not every trade is a winner. Okay, but that's why you have to have tight stops. You have to have some form of risk management in your trading plan. Okay, but are you willing to risk this? This is maybe it's an 8-range chart, so it's maybe 10 ticks. Are you willing to risk 10 ticks to catch a move like this? From I don't know what that is, 25, 30 up to the 80s, the 90s. I would take this. I would take trades like this all day long if I know I could get trades like this as well. I mean, I don't want to take all my trades like this. I want to take more like this. But you know what? Not all are going to look like this. Some will look like that. Okay, again, this is, I put this example in here because I want to show you, I talk about taking trades in context. You just have this massive move down, 46.10. I don't know if it was higher up here earlier. 46 down to 45. It's a $1 move in crude, and you're getting a sell signal down here. You just had a massive move, and then you're getting a sell signal. What I see when I see it like this, this is what capitulation is. If you don't know what capitulation is, it's basically everybody that's long and they're waiting for the market to come back, and you had this massive steep drop off. Okay, it stops here. They're thinking, okay, hey, maybe I get a bounce and get out. And then the selling comes in, and they're thinking, ah, shit, we broke down through here. Just get me out. And then it bounces back up. That's where you're seeing it there. And the other thing is, if I'm taking a sell signal, I don't want to take it on the back of a green candle. If I'm taking a sell signal, ideally I'd like the candle to agree with the position. So if I'm got a sell signal, I prefer to see a red candle. Or if I'm taking a buy, I want to see a green candle. Okay, so here is a crude chart again. You have this high, and you're buying it. Do you want to be buying the high? This is why you got to look at an order flow chart, and you can decide from there. If you think this high is, we finally popped up, took out the high from here, got through it, but you know what? It's still a red candle. Like I said, if you're buying, if you're taking a trade because you got a buy signal, you want the candle to be green like you have it here. but this is red. You know, so again, take things in context with what's happening in the market. Okay, this one, yeah, it didn't work out. You know, it started to, you know, honestly, you probably would have scratched this trade if you're got any skill as a trader. I mean, honestly, you know, if you're getting along here and by here, it's not moving yet, you get out. You don't hold it until it sells off like this and then say, oh, you know, this is terrible. Well, honestly, you have all this time here, 8:30 to 9 o'clock, and the market's going nowhere on you. What it's telling you is get out of this position and wait for another one, wait for another opportunity. You know, if it hasn't happened in 30 minutes on an 8-range chart, you know, it's going to be a struggle. And then you get a couple sell signals here. You know, again, this is a sell, and it's a green candle, so you know you're probably not interested to take it. You know, here's a sell on a red candle. You know, and boom, you know, from what is that, the 30 level down to, you know, the 90 level. It's a nice 40 points. So again, are you willing to risk this for this? Again, I would take it. Okay, this is a bond chart, 1 minute chart. You know, again, this is a 1 minute chart, so you know it's sort of, you know, on a minute level. There's a sell here. I don't remember, so I'm not going to talk about it. But you got a couple buys here. You know, this one and this one. Okay, and it's a nice move up from the 20s up to, you know, 26, 27, 28 level. Okay, here's a 1 minute chart. Again, you know, this is again what I'm talking about, taking things in context. You see, we just moved up already, had a nice move up. You know, then consolidate, and then you get a nice another move up here. You know, there's a couple ways you could read this. You know, people will think, well, okay, you hit that high, you came off, now you're making your second attempt, you look for that breakout. I mean, there's people that trade that way. Now, honestly, I'd have to look at an order flow chart and look at the volume numbers to see what, if I wanted to take this or not. But, you know, if you took it, you know, you're going to have a tight stop. You'd be stopped out. Okay, then a little bit later, you got a sell signal here. You know, and it says you're getting short, you know, 16, 17. You know, it trades down to, you know, 5 or 6. So, again, you know, you got a little bit of risk here. You lost, but then you've made it back and then some on this trade. You know, and I'm not saying, you know, you buy it here and you wait for it to break out, you know, and you ignore this. You know, if you're long here and you're still in it by this time and you got the sell signal, at a minimum, you just have to get out of the position, whether you want to get short or not. But honestly, I think you would have been stopped out here, that you wouldn't even have to make that decision. And then when this signal kicks off, you can, you know, you can take it and ride it. Okay, again, this is a 1 minute chart. You know, this is a little early. You know, you got to buy here. Okay, yeah, it did kind of work out a little bit. Then you got to sell here. Nice sell. And a nice move down. You know, bonds these last few weeks have been very, very good trading markets. You know, you can make if you're positioned right, you can make some really nice trades and rack it up really early in the day. What is this? Okay, that one. Okay, that's a little bit different. This, again, it's a bond chart. This is July 1st. Yeah, you got a buy signal here. You know, it moved up a little bit, maybe came down, stopped you out. I don't know, before shooting back up. You know, but then what happens? You know, a little bit later, boom, you get a nice sell here. Again, you know, 174.24 down to you know, 174.00. So again, are you willing to take a little bit of risk like this? You know, if you're getting stopped out, if you got to stop right here, I don't know how much room you're giving it, but you know, right around the corner, you're looking at this next trade. Now, I know some people will say, "Oh, I see, it works great after, you know, you have a losing trade. Take the next trade." Well, you know, if you're doing that, does it increase your odds? I don't think so. I think you really should be sticking to every single trade. I mean, you could finesse it. You could add it into your style of trading, and maybe find better entries. But I mean, you know, I won't get into that for today. I'm just talking about the indicator in general. DAX, okay, you know, DAX for a lot of people is a market that drives them up the wall because it moves super fast, and fortunes are won and lost in this market. And you know, but again, it's the same thing. You know, it's DAX. It's an 8-range chart. I'm looking at the same things. I'm looking at the surges in Delta. You know, made a move higher. Boom, you get a sell here, and it's a nice move down. You get a buy here. Yeah, maybe you could have got something out, you know, but when it starts coming down like this, you're looking to get out for a scratch. You're not looking for it to stop you out. And you get a buy up here. Again, it's a move. What would you rather take? Would you rather take a buy like this or a sell like this? After a move up, you got two choices. Someone puts a gun to your head. Okay, decide which trade you want to take after a move from 93.30 up to 93.65. You want to take this trade? You want to take this trade? I would take this trade more so than I would take this trade. Yeah, you might get a breakout, but more often than not, you're just going to get the market falling over again. What is this? DAX. Okay, it's a little bit more choppier. And, we're sort of in this area here. It's kind of a range area. Start to break out of it. Increase in delta. Boom, 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 boom. And it shoots up quite nicely. Another DAX chart. I'm just going to finish up with some DAX charts here. This one, it didn't work. Again, we came into a low, bounced up, started coming back down again. Again, is that capitulation? You could read into that. Now here, we got another sell signal. It's a little bit higher than where it was earlier, but the move is a much smoother move down. So, this one you probably would have got stopped out on, but you could have, whatever loss here, you get back on this nice winner here. There's another DAX chart. Again, this is that move there. You make the big move down, bounce up a little bit, start coming down again. And on the way back up, you got a nice move to cover for it. Again, are you willing to take this, risk this, to capture this move? I think you should be willing to do. Okay, this is the last chart for the day. Again, it's a nice, beautiful chart. People say, "Oh, you cherry pick these charts." Well, you know what? If you think so, just download the indicator, throw it on your charts. You'll see a lot that are beautiful. You'll see some that are not average and some that are crummy. Okay, but again, I've showed you times where it doesn't work. I've showed you times where it does work. And this is a nice one. If anybody's traded for a long time and you've traded DAX, you know how crazy that market is. Someone told me, one of my users told me, in London they call the DAX the Widowmaker, and I could understand that. And I traded it for a while, and I was very successful with it for a few months, and then one day everything went pear-shaped, and a lot of what I had made I gave back to the markets in an afternoon. So it's can be a tough market to trade, but it's a market where you could crank out some nice moves. Again, if you can get in and out of a market pretty quick, I'll say there's not as much risk, but that's what you want. You want to be able to go in and out with with your profits. So here's a nice buy. Starting to move up. Okay, yeah, I don't know. Maybe you get stopped out here, sort of hanging around here, then shoots up, kicking yourself if you got stopped out. You got a nice move up. But here, right at this high, you got a nice sell. There's no reason not to take this. This is what you want. This is, if there was a textbook example of the sell, that's it right here. And the market makes a nice move lower. Okay, so, again, just to reiterate, one of the problems that many traders face is not trading with market-generated information. What that means is they trade with indicators that take price and mathematically massage it into something that's easy for them to understand. Sell when the oscillator crosses the zero line, or we're trading above the level of 80. That means you're overbought and you should look to sell. I mean, that's not really taking good trades. You're just reacting to something else. You're not necessarily thinking. Delta Surge takes market generated information and shows you what's happening when one side is showing their strength. I showed you what it looks like on bar charts, but honestly I think it really works best on order flow charts, so you can digest what's actually happening in the market, as opposed to just trading with a chart that you got no clue as to what's happening. Again, it's a tool, right? The Delta Surge is a tool. Let's think of it like a hammer. You're gonna build a house, you need a hammer. You can't build the whole house with just a hammer. It's a tool. I mean, some people, good traders, can take it and develop it into something that, yeah, they probably can turn it into a trading system. I'm not saying you can't, but at its basic level, what I'm giving to you is, how I used it in my trading for years. And, I know somebody will take it, and one of the reasons why I put it out there is so people can have it and work with it, and hopefully they can turn it into something and come back to me and say, hey, you know what, thanks for that indicator, this is how I'm using it, and then I get something in return in that sense. So even though it's out there for free, I do get something, pay it forward, so to speak. So hopefully someone will come back to me in the future and say, yeah, this is what I was able to do with it, and look at it, it's amazing, thank you. And it's win-win for both of us. It's not a red light, green light trading system. If you want that, then it's not for you, because that's not trading. You have to be able to make decisions in life. And if you can't make the decisions in trading, then you probably shouldn't be trading. And once you realize that, trading is about making decisions, then you'll become a better trader. People ask me lots of times, how can I become a better trader? Well, the best way is to understand what's happening in the market. You can't make good trading decisions if you don't understand why things are happening in the market. If you go to the library, say go to the bookstore. Bookstores don't exist. I don't know if libraries still exist. Or go to Amazon and get the books on trading biographies. And read all the major. Read the biographies of the major traders, the successful traders. They're successful because they understand what makes the market move. They don't all trade the same way. You could read Market Wizards. You got 20 traders in there. Each person has a different way of trading. So don't think that there's one right way, there's one wrong way. I mean, there's a lot of wrong ways, but there's also a lot of right ways. So the Delta Surge is, I'm putting it out there, so hopefully you can learn something, take it away from it, and learn to become a better trader. Okay, so like I said, if you stuck around to the end here, you can I'll tell you how to download it for free from my website. You can download it if you go to the following web address, www.orderflows.com/deltasurge/index. Okay, honestly, it's a bit of a mouthful. Let me see if I can, honestly, you can probably, I'll try and change it, but for now, this is the website. I'll probably put a link to it on my website, so it's a bit easier to find. Just go to my website, orderflows.com, and look for Delta Surge. It should be very easy to find. I'm going to put it out there, make it a little bit easier. I know this is a bit of a mouthful for a lot of people, but that's what it is. If you want to type it in, the page is there. You can just go in there and go to the bottom of the page. All the instructions are there. So thanks everyone for watching this presentation. To learn more about the trading software that I use in this presentation and how you can profit from order flow trading, visit my main website, www.orderflows.com. Be sure to subscribe to my YouTube channel. I post a lot of videos up almost every day, time permitting. And hopefully you've learned something today that you can apply to your trading. Again, check out the indicator. Just go to this website address and you can download it for free. I'll try to put it in the link below to this video on YouTube, so you can just click on it. So thanks all, and see you on the inside. Bye-bye.